Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the Great British Pound, because here we also have set up. We haven't taken it during the previous week, but right now is some special moment where it could be interesting. Actually, guys, as you can see on the euro currency, our suggestion on possible upward retracement based on some intraday hand shoulders pattern has failed, because market just turned down in the open trading session of the week and returned back to the previous lows. But actually, overall price action that we see on the euro currency doesn't cancel the coming upward bounce, because this market doesn't show any significant breakout. It stands approximately the same lows as was formed on the previous week, and it's just the question of the few sessions where this upward bounce will start. Because if you take a look at the United States dollar index, you will see that all this stands around the coming retracement down. So this weekly chart, and here we have the bread and butter set up, but market hasn't quite reached yet the resistance. As soon as this will happen, it's possible retracement will start here on the dollar index, and that in turn will trigger this upward bounce across the board on other currencies. On the euro currency, on the Australian dollar, because there we have the same setups of the possible hand shoulders pattern that might be formed here. So that's why don't worry about current bounce as we see on the euro currency. I will show you. Here's, guys, our hand shoulders, and here's the market just opened down with the return back the previous lows. So it looks normal, so it's nothing really curious has happened here, because upward retracement here is still possible, and it's just question on the combination of the matching between the behavior of the dollar index and other currencies. So that's why I think that our expectation is still valid, and we could get in the nearest future this bounce up. Meantime, while we are waiting for this completion of our training plan, because this, by our suggestion, this area should be not bad area for thinking about taking the short position. While we are waiting for that, we could take a look at something else, and this one is the Great British Pound today. On the Great British Pound, in our weekly research, we have talked about this construction already. As you can see, market 2 weeks ago has completed this AB equals CD pattern. This pattern is rather harmonic, but CD leg is a bit faster than AB, but in general, it's not really big divergence. It's the point where it should be completed to a real completion point here. Now, on this drop down, theoretically, we could treat it as the bread and butter trade, because here we have the thrust up, and market has reached some support area. But this is not quite the bread and butter, because there's too much closing below the 3x3 moving average. So usually John Napoli tells about 3 closes below the 3x3, where a market should reach the significant support. But here we have the 6 closes. Still, maybe this current price action doesn't match to bread and butter rules at 100%, but overall market mechanics stands the same, guys, because we have thrust up, we have first retracement after a significant action up, and previous momentum that stands on the market here is still valid. So it hasn't disappeared, and it's still here. That's why by nature this bounce here could become and work as the bread and butter as well. So here currently it's very big chances on the possible bounce on the Great British Pound. Another reason for that guys, actually here we have also another John Napoli combination. It's called the bullish stretch, because you can see that market right now stands at daily average sold right at the fib level from the C point. This is important fib level from this low to this top. 3/8 support is 132.47, and it's also daily average sold. That's why here we should keep an eye on the possible bullish reversal patterns, and that could trigger the upward action. And here indeed some upward bounce could happen. On the 4-hour time frame chart, we see that market has reached some kind of the 50% support of our thrusting up action, but right now it stands in the channel. Some kind of the butterfly has been formed here, but as you can see, market has dropped slightly lower to support line of this downside channel. So that's why here we probably should and have only two chances how better to think about them and take long position. First of all, you could drop your time frame in lower, maybe to this, to hourly chart, and watch for another bullish reversal pattern somewhere at the bottom of the channel. This is one possible way to act. More conservative tactics suggest waiting when the market will break this channel up. Probably retracement up will be stronger. It's not will be limited by this just some minor action. So when market will break this channel up, you could try and take the position on the first retracement, the expectation of further upward action. It's probably retracement should be somewhere to the 50% or 618 from this top, these lows. That's approximately will be some area around 3480, somewhere in this area probably. So, but this stop probably should be formed relatively fast because market already stands, as you can see, its support area, and all that we need is just to get some clear signs of the reversal on intraday charts. Right now, yes, we have this butterfly, but it's not really good that market has dropped below the 1618 extension of this pattern. That's why I think that it will be better to wait for something else on the hourly chart here. Maybe minor end shoulders will be formed, maybe another minor butterfly will be formed here, something of that sort. Or, as I said, the conservative way to trade this, it's just wait the clear confirmation of the upper breakout here, and then trying to take the position on the retracement. Maybe market will form here a larger reversal pattern. For example, this could become the left shoulder head. Breakout will happen with this retesting of the trend line. Market could form a right shoulder. That will be the chance to go along with some kind of large ABCD to the 135, 134, 80 area. So it's something of that sort. So, but overall setup and combination that we see on the daily chart looks attractive, and I think it's worth to keep an eye on it.